Hello, Derek.
Hello, good afternoon.
Good afternoon. Can you hear me?
I can hear you just fine. Can you hear me okay?
I can hear you fine. I can hear you fine. All
Perfect.
right, all right, Derek. So we had a chat with Justin before, and he have already lifted up that he has started a new fund, private credit, and he looking to raise 100 million.
That's
And
right.
yes, and you are the partner to him, correct?
Yeah, I'm a partner, and I am our Chief Capital Markets Officer and also our General Legal Counsel.
Okay, understood. And I think maybe the best way to start today's call with is just to give me a better background on you, on what you have already done before, at the same time what you have already built in this current fund, and before the end of the call, if there is any potential collaboration. So I will make sure to show the next few steps from there.
Perfect. Yeah, absolutely. So where do you want to dive in?
I mean, about you, about what you have already done before the fund.
Yep. Okay. So I don't know how much you talked to Justin, so I'll just kind of start from the beginning. So Justin and I met each other about 15 years ago. We were part of the inaugural class of Genesis Capital. I was brought into Genesis Capital right at the time that we were raising our first 250 million institutional capital from Oak Tree Capital Management. We raised that platform up to about a $2 billion or so annual origination platform. And then that was ultimately sold to Goldman Sachs. And then after that, Justin went to a different fund called Quata. I went to a fund called Strategic, and we kind of just continued to play in the same space. And then I got involved in another fund and did an exit. And about that time, Justin reached out to me to let me know he had raised a REIT and wanted to sort of enhance and increase his capital stack. And that is kind of how he and I connected. So I joined as a consultant originally, helping raise capital. And then after a few months of doing that, they asked me to just join the team as a partner, which is what I did. So my history has been, I will have been a lawyer for 20 years, literally next month, which is hard to believe. But I've been in this space pretty much my entire career. I was with a firm. I went in-house at Anchor Loans. I don't know if you know them, but they were the first big private money lender in the space, and I was their first general counsel. And then I was, again, brought over to Genesis Capital. And so a few years after that, so we collectively have originated over $3 billion in RTL. And I've personally raised about $350 million or so in institutional capital to support these various funds.
Understood. Thanks for sharing that. And right now, in this current fund that you are working in, what are the under management?
Well, so okay, so this is where it gets a little bit sort of it's kind of a hybrid, right? So I'll walk it through this way. So at the very top of the organization sits Real World RWA Group, which is the management company. And under RWA Group, we have a number of SPVs. So the first SPV, so if you're looking at an org chart, kind of visualize it from left to right. You would have at the very left, you would have the REIT, which is sort of sits at the core. And the REIT has around, not very big, and I think it has $8 or $9 million AUM, so it's not a huge bucket. Ultimately, we want to get to the point where we can balance sheet because we like the alpha between what we're able to get on the street versus what we are able to get our cost of funds right. So to just give you kind of a window into that, we try to keep our blended average cost of capital in the high 7s to low 8s, and our weighted average coupon that we lend at. Pardon me, I'm just getting over a cold. The weighted average coupon that we lend at is about 10.6. So the goal is to grow that balance sheet as we grow the fund. But we wanted to get to a little bit quicker economics to get our platforms profitable as soon as possible. So what I did and what we sort of worked together to do was set up additional offtake partners. So we still originate the deals, but then we sell them off. So that's where the next piece comes in. We have 2 other SPVs that stand alongside that REIT, and we're probably going to add a third. And the way those work is they're highly leveraged. So for example, in SPV1, we went out and raised, I think, $5 or $6 million in equity, and then we levered that up considerably. So I think we levered that up to like 30 million, and that's not a balance sheet. That's just basically a short-term bucket. We originate the loans into that bucket, and then we sell the loans off to various institutional capital partners that we have. A couple on Wall Street, a couple kind of scattered around the U.S., but typically those institutional funds buy these loans that we sell, and we realize both the origination fees when we sell loans, when we originate the loans rather, and then we also participate in the excess interest payments, right? So we did basically take a scrape. That's how we monetize, again, that alpha between what our cost of capital is and what the note rates are.
Okay,
So,
understood. And right now, have you raised any capital this year?
Have I raised what?
Had you raised any amount of capital for the fund this year?
Yeah. We raised about, like I said, about five or 6 million for that fund.
Is it 5 or 6 million?
Yeah, because you don't need a lot of equity to do this kind of structure. But the next structure we're working on, and this is where all of my focus is right now. So I mentioned there's an SPV3 in the works. SPV3 is going to be a very different sort of structure. SPV3 is going to be a balance sheet, and this is going to be very similar to what we did at Genesis Capital. The way it's going to work is this: we're going to raise about $100 million in a blend between equity and mezz. Probably the majority of that's going to be mezz capital, and then we're going to lever that mezz capital 3 to 1, which will, so if you figure we raise $100 million in mezzanine, and then we lever, another $300 million in leverage, that basically allows us to create a synthetic balance sheet, keeping that cost of capital down in that, call it 7, 8 space, and then realize the alpha between that, call it 8% cost of capital and a note rate out there at 10.6 to 10.8, but we get to keep that rather than participating in the scrape with the seller. So we like the economics of that very, very much. We just wanted to make sure that that we had the origination capacity to fill that bucket, and we have discovered that we do. So that's kind of the bigger piece that we're working on that I've been tasked with. So I'm literally going to dinner with one of our investment bankers tonight to talk through this a little bit further. But I think within the next quarter, that's the next vehicle we're going to launch.
Understood. And right now, how many team members do you have?
That's a good question. We just brought on 2 more today, so I'm going to guess here, Zaid, and I apologize. I may be off by 1 or 2, but I think we have around 13 or 14 right now.
Okay. And what the return yearly to the investors right here?
What's that?
The yearly return to the investors. I mean, what are you promising the investors that you will generate for return?
Yep. Sorry to ask you again. For whatever reason, my internet connection is not very good. But
actually, I can't hear you very well. So I will absolutely be honest with you. I can't hear you very well. It sounds like it's a lot in the background. But yeah, we can keep going it on.
Okay, good. So it's not just me. Okay, good. I mean, it's bad that the call quality is not very good, but at least it's not just me. So okay. So right now we have a couple of different structures. So I'm going to go to the SPV1 structure. And the way SPV1 works is we pay a 12% pref on the SPV1, and then we pay a 20% promote. After that, we take 80 to promote and we pass on 20. Then the next fund that we're raising is going to be the opposite. It's going to have a hurdle, I think, of 11, and we're going to pay an 80% promote, and we'll keep the 20% promote there. The IRR on SPV1, given that dynamic that I just shared with you, right, the 12 pref, that IRR right now has a 30 handle on it, because it's highly leveraged.
Okay, understood. And how are you generating clients? Or how you will start to generate clients? Is like conferences, events? What are you doing to make that happen?
So all of the above. So we are all industry veterans. We've all there are 4 partners, and we've all been in the space a really long time. 3 of us Justin, who you have been in contact with, Jason, who you may be aware of, and I all started at Genesis Capital, and my career even predates Genesis Capital. So because we've collectively originated over $3 billion in this space, we have a lot of sticky relationships. So we, on the biz dev side, the lending side, we lend to the sort of tier one institutional class borrowers and sponsors that are building, at any given time, they've got 20 or 30 projects underway. And those borrowers and sponsors have been with us now, some of them for over a decade. So that's sort of our core. And then in addition to that, just by virtue of our reputations in the space, we get a lot of inbound traffic. And pretty much anytime I go to a conference, I pick up an additional third-party originator. So these are brokers that are also lending in the RTL space that really like our product. And so they, we've got a very aggressive buy box, and we have very aggressive pricing. So that's attractive in the marketplace. So that probably adds as well. So based on that, we think our 12-month run rate is going to be about $400 million in originations, maybe a bit more. And we think we'll probably plateau in years 2 or 3 around $800 million to $1 billion annually. And that's probably about as big as we want to be.
Understood. So the capacity here, right here, is up to 800 million.
That's right.
Okay, understood. And from what you can see right here, you can raise 100 million from your own sponsors and brokers and the inbound traffic.
That's the idea. That's the plan. I mean, that's the idea.
Okay. Have you done that before?
Yeah, we did it at Anchor Loans, and we did it at Genesis Capital.
Okay, great. Why are you here on today's call? What are you looking to take from today's call?
Well, that's a great question. I just got the introduction from Justin. I didn't really get a lot of context. He just asked us to connect. So I apologize. I'm not super familiar with what you do or your organization or really your background or anything. So my view on this call was it was simply a discovery call, right? To kind of just get the introduction, get to know each other a little bit, give you an opportunity to hear a little bit about what we do, and maybe also get an opportunity to understand kind of what you do and what you're looking for, and then explore any possible synergies from there.
Absolutely. After the call directly, I can make sure to send you over the files about us, so you can take a look on our own operation, what we are doing, and you can just review them. And I will also make sure to get back to Justin within the next 24 hours. And more than that, it was my pleasure to talk with you today, and I'm looking forward to explore more opportunities. Thank you for your own time.
Absolutely. I really appreciate your time as well. Have a great day.
You too. Bye.